This is probably the single most powerful investing strategy that has generated a historical return of over 30% over the past 17 years. And the best part is, even a complete beginner can do it. Because all you need to do to beat the market is just these two things. If you want to learn how to beat the market in 2023 and beyond, watch this video to find out what is this magic formula. Hi minasan, this is Chloe and welcome back to my channel, the all-in-one place for you to learn about stocks, investing, as well as options. If it's the first time of you coming to my channel, remember to hit the subscribe button as well as the notification bell so that you will not miss out any of my future investment updates. An early thumbs up is also appreciated because it will tell YouTube algorithm that you find this video helpful, and in return, I will share with you the magic formula to beat the market. This magic formula was designed by legendary hedge fund manager Joel Greenblatt, whose fund Gotham Capital has a track record of over 40% over the past 20 years. Truly impressive, isn't it? And lucky us, he spills all his secrets in this little book called The Little Book That Beats the Market. Now you must be thinking, okay, so what exactly is this magic formula and how does it work? Don't worry, I've got you covered. In this video, I'm going to summarize for you the key takeaway from his book and explain how you can implement this magic formula on your own portfolio step by step. So sit tight and get ready to learn the spell of this magic formula. The magic formula is a system that ranks all the publicly traded stocks in the US in the order of best investment to the worst investment, using the metrics of these two simple yet effective metrics. The first metric is return on capital. Return on capital is a percentage of the company's earning relative to the capital needed to generate this return. Let me give you an example of using a bubble tea shop. Don't ask me why, I'm just a fan of bubble tea. In this scenario, it costs $100,000 to build a bubble tea store A. Let's say the store is able to generate net profit of $10,000 a year, so this bubble tea store has a return on capital of 10%, which is using $10,000 divided by $100,000. On the other hand, Chloe also has a bubble tea shop called Chloe Bubble Tea. I know the name is very creative, isn't it? Let's say it also takes $100,000 to set up Chloe Bubble Tea, and every single year, this bubble tea shop is able to generate $50,000 in terms of net profits. So what is the return on capital? $50,000 divided by $100,000, that is 50%. So which bubble tea shop would you like to invest in? Bubble Tea A or Chloe Bubble Tea? Obviously, that will be Chloe Bubble Tea, isn't it? Because it shows that Chloe Bubble Tea has ability to maximize profits given the same amount of capital injected. すごいでしょ? In general, great companies generate a high return on capital because it means that the business knows how to maximize its profits given the same amount of resources. That's why the magic formula used this first metric to rank the best stock. Now we know that it's important to invest in good company, but we also need to buy them when they are cheap. And that is why the second metric is earnings yield, which compares the company's earnings to its purchase price. Now let's go back to the bubble tea shop example. Remember, bubble tea shop A earns $10,000 a year. And let's say the owner is willing to sell you the store right now and the asking price is $500,000. Is it a good deal? Well, it depends. Because when you buy this store, you are able to make $10,000 per year on a purchase price of $500,000. That means your earning yield is only 2%. On the other hand, let's say right now you are also given an option to purchase Chloe's Bubble Tea, and it's also going for the same price of $500,000. But as you know, Chloe's Bubble Tea can make you $50,000 a year. In other words, an earning yield of $50,000 over $500,000, that is 10% per year. So that is definitely a better deal, because right now you can make more money for the same purchase price and thus giving you a higher earnings yield. So remember to invest in Chloe's Bubble Tea if I ever have one. Jokes aside, that is the exact same thought process for the magic formula. By ranking all the stocks based on these two metrics, the magic formula can help you to screen out all the great companies at bargain prices, which is what investing is all about. It's pretty similar to Warren Buffett's investing philosophy, which is to buy wonderful company at fair prices so that you have the margin of safety when it comes to investing. So the magic formula combines the best of the both worlds and ranks the stocks with above average returns and below average prices. And by investing in these companies, your wealth is going to grow. According to Joel Greenblatt's book, the magic formula had an impressive return of 30 30.8%, more than doubling of S&P 500 12.4% during the same time. He subsequently published a sequel a few years later called The Little Book That Still Beats the Market, and using the same magic formula compared to that of S&P 500 over a 21 years period from 1998 to 2009. The magic formula generated a return of 23.8%, while S&P 500 only had a 9.5% return. That means if you have invested $10,000 following the magic formula back in 1988, by 2009, you will have a whooping $800,000 compared to just $67,000 if you had invested in S&P 500. The difference is really impressive, isn't it? So if you implement this strategy in the long run, I'm pretty confident that you can start beating the market from 2023 and onwards. So let's delve deeper into exactly how can you use magic formula step by step. This free website was developed by Joel Greenblatt himself to specifically helping investors who are keen to follow the magic formula. And you can use this stock screener to generate a list of the top ranking stocks. The book advises you to put at least $15 million in terms of market cap. But if you are only comfortable investing in companies with larger market cap, feel free to change it to 100 million or 1 billion or more. After you click Get Stocks, you will get the list of companies that has the highest return on capital and the highest earnings yield. So by choosing the top 30, you already have the best of the both worlds. Also in the book, Joel Greenblatt said that it's important to split your portfolio into about 20 to 30 stocks. And you should be buying equal amount of dollars into each stock. So for example, let's say you want to buy 30 companies inside this list and you have a $30,000 as a capital. So for each stock, you should be investing $1,000 each. Joel also suggests that you should be buying all these companies batches by batches. That means instead of buying all the 30 companies at one go, you should be splitting the purchases in 1 year. And every 3 months, buy about 7 to 8 stocks. Keep doing this every quarter, and by the end of 12 months, you should have about 30 companies in your portfolio. One more interesting thing about this magic formula is the holding period for each stock is 12 months. And once they reach the 1 year mark, you should be selling your portfolio away. For example, after 12 months, your first batch of 7 stocks will reach its sell period. You should be selling these 7 stocks away and use the money to repurchase another 7 companies that are based on the most updated list of the magic formula. So this is where it's going to get a little tricky because you will need to keep track your purchase date and make sure that you sell them exactly 1 year down the road. So my advice for you is to keep a simple spreadsheet like this to remind yourself when it's the time to sell. I know it does require a little bit of work. However, it's definitely a lot less work as compared to you researching on individual companies. Plus, if it can give you a 20 to even 30% return from now on, why not? It's definitely worth that little bit of effort in my opinion. In fact, to make your life easier, I also created this Excel spreadsheet to help you to get started step by step. All you need to do is to click on the link below to download this Excel spreadsheet and start building your investing portfolio. By the way, I didn't want this video to be 1 hour long, and that is why whatever things that I share is a brief walkthrough. But if you're serious about understanding the whole investing philosophy behind that, make sure you check out this book for detailed instructions. Or if you want me to do an in-depth tutorial showing you the exact thought process of how I pick stocks from using the magic formula and what companies will I put my real money investing in using the Excel spreadsheet that I created here, do type Magic Formula Guide in the comment section below to let me know. So that's what Magic Formula is about, picking great businesses at bargain prices so that you can grow your wealth safely over time. However, it's important to note that although the Magic Formula asks you to sell your portfolio once a year, the key to success is you must repeat the same process for at least a few years to see the decent return. So this investing strategy requires a lot of discipline and patience. And while it outperforms the market over the long run, there may be also periods that it will underperform the S&P 500. And that's why when it comes to investing, patience and the ability to stick to the strategy even during downtime is the most important thing, so that you can start beating the market and generate yourself 20 to even 30% return in the long run. Also, it might not be suitable to use options on the stocks that you selected from the magic formula, especially if you're selecting companies with small market caps. The liquidity issue to the company may not be the best choice for options. On top of that, the magic formula requires to split your investment amount equally into 30 stocks. So it would be a lot easier to implement on the stocks itself rather than using options. options. However, in my opinion, option is still a very powerful investment vehicle, and I have been using it to generate passive income consistently over the past few years. For example, recently I did a video on how I use BOSS option strategy to generate about $300 in about 2 minutes. If you want to learn how you can do it as well, check out the video right here. And if you are keen to learn more about options, you can also join us in our upcoming free 2-hour Next Level Options Masterclass to learn 3 different option strategies so that you can profit consistently in different market conditions. All you need to do is click on the link below to register for your free spot. I hope you find this video helpful, and if you want to get more investment updates every single day, then make sure to join my Telegram channel. And if you're new to my channel, make sure to hit the subscribe button and continue to learn how to invest safely so that you learn how to take back control of your own finances and live a life that you truly deserve. With that, I will see you in the next video. Arigato!